Hello, everyone, and welcome to another episode of the Reinsurance Podcast. I am your host today, Jerad Lee, but I am not alone. I am joined by the formidable Rosina Smith, Chief Product Officer of McKenzie Intelligence Services. Welcome, my friend. How are you?
Oh, good. Thank you so much for having me. What an introduction.
You're stepping into the Ben Rose's very impressive co-hosting shoes today. So
I
you've got
know.
a lot to dive into and things.
I know. I feel the pressure.
Yeah.
Watching the podcast, as
Yeah.
you know, tuning in.
Yeah.
But yeah, I'm feeling the pressure. Let's hope I can match his performance.
You're going to do excellent.
Yeah.
Let's
And
dive
it's
in.
just replacing a rose with a rose, right?
Yeah, exactly. We don't like to stem too far from our traditional branch in this way.
Course.
Yeah, of
course. Nice.
But you are in the sort of the Insurtech space, but like us, are someone who's come from the industry.
Yes.
Walk us through sort of the early parts of your career, how you found the reinsurance insurance space, and then we'll dive loads more into what you and the team at MIS are doing and everything else. Yeah. But I think you share that sort of journey from academia into early, right into the weeds of the industries.
Yeah, exactly. Like many people, you just find yourself dropped in on a graduate program in a large reinsurance business, and you think, wow, how does this place function? How does this work? How do these places exist? And that was a great experience for me. I was at Allianz for 8 years. Yeah. I got to work with fantastic people, work in different countries. It was really, really great. And then I kind of got the bug for bringing new stuff in. Yeah. You put something useful in front of an underwriter that they've not seen before, it's a really good way to make friends. When you can actually make some innovation land and you see people using it in the business, it was just brilliant.
Because you started doing sort of geospatial work within Allianz. What was that work look like? What problems were you trying to solve within Allianz?
It started. We never called it geospatial to begin with. We started talking about, there's this peril in the UK. It's pretty tricky. It's called flood. How do we respond to it? And at the time, lots of vendors in the market were bringing out new flood products. Mm-hmm. We had sort of the flooding of 2009, Somerset floods, and everyone sort of realised, okay, flooding's a serious issue that we can't rely on postcode level maps any longer. And so, my role was to kind of look at those new data sets and figure out, are they useful? How could we deploy them? And the answer was they're very useful, and this is actually pretty much a game changer. And we know that now because we all talk about flood models all the time. They're a completely valuable asset in insurance, reinsurance, broking communities, and there's lots of really great products out there. But we started thinking about, what other perils can we tackle in the same way and have a truly data-driven approach? And that's where kind of the whole geospatial thing grew out of. Sure. And I think traditionally reinsurers have been a lot better at making use of geospatial data than insurers. Mm-hmm. But when we started to actually put it in the hands of the people using it, your underwriters and your pricing actuaries, that's where the value of these things started, being realised. Yeah. And that's what I started really enjoying. And I was like, okay, what about this fire data set? And everyone's like, yeah, fun. What about this tree root ball data set? Yeah. No, not so fun. Okay, it's fine.
Yeah. Well, and you can begin to see the emergence of your interest in the sort of the Insurtech space, right? And then similar to me, you're going, there's some of these things that we're introducing which are fundamentally changing this sort of strategy of these organizations. Yeah. But it's just within this one place. And you look across the industry, and the opportunity to go in and have an impact more broadly is very obviously there. Yeah. Why do you think that sort of some parts of this industry have been slow to innovate in the past? Obviously, you've been within the biggest firms, and as you're going into them now with products to bring in, what are the sort of things that you're seeing that cause that slowness?
I think it's really easy to blame the insurers and reinsurers, and I think we often do as an industry. We talk about we are slow, and we're not talking about Insurtech when we say phrases like that, but I don't think it's the case. I think the reinsurance insurance community has so many things to focus on, and we are driven by regulation, and we are driven by doing the right thing for our existing clients day in, day out. And so the focus to to actually innovate is secondary. People talk about big bad insurers who make loads of money. I mean, let's look at CORs. There's not loads of fat in this space.
Yeah.
So actually, I think there's more responsibility on the Insurtech community and the vendor community to make the solutions so simple to understand, so simple to integrate, and so simple to realize the value that insurers can actually prioritize them. And I sort of started realizing that whilst I was working in big corporate, I had some really fascinating products come by my desk. People saying, "Can I show you this? It's going to save all the problems that the insurance industry has ever experienced." And you look at them and you think, yeah, but you're about 2 years away from it being useful, and you don't understand that. And that translation piece of having sat on the insurance side of things, even someone like you and Ben who wants to change, and just knowing that it's difficult because of all the other stuff you've got to do, which is the right stuff to do. It kind of showed me that the value is in building products that are easy for the industry to use. And making it so obvious. And you have to do the hard work as the Insurtech to prove the value. It's not sort of just ping it over the fence and say, "I've got a good idea. What do you think, insurer?"
I think that's spot on. And the importance of highlighting the value to them and making that something where they very obviously recognize that, and it's something they can easily onboard. Is spot on. Right. The number of, I remember being at an Insurtech conference in London, this is maybe 3 or 4 years ago now. And there was someone on stage talking about the thing that they were trying to do, and they weren't getting very much adoption. And their position was, well, it's just because this industry is so slow, these people don't want to, they can't understand technology or anything else. And there was a direct challenge to them in that conversation going, there's no issue with this, our ability to use this software. The issue is that you're not highlighting any real pain point that is fundamentally threatening our business or challenging us in a way that makes me think I am going to spend a bunch of our company's resources, not only financially, but also with the time and everything else for a nice to have thing. And I think this is where we'll touch into McKenzie now. You guys are doing some really, really interesting work. Tell us a bit about kind of the products that you have in the market, and where you're sort of pointing that value proposition towards the insurers and the reinsurers.
So our technology is a software as a service offering. Our core technology is called GEO, which stands for the Global Events Observer. I have to get that right as product officer. Which did you name it?
Did you name this product?
No, I didn't. I inherited it. I've come up with some alternative names, but none of them have made it through marketing, which is a good thing. So we are observing events that are happening across the globe on a 24-hour basis, and we define an event as anything that will give rise to a catastrophic loss for our insurance community, be that because of volume of claim count, or total insured value exposed. So we're monitoring the exposed assets that each of our insurers have on their books constantly to see, is there an event that's threatening a huge surge in claims, or any other output that would lead to your claims teams having to deliver a non-standard response, or anything that's going to cause a surge in loss adjusting fees and availability, or anything that's going to fundamentally change the way you underwrite, price, select risk. And so we do that on your, the things you would expect us: natural disasters, hurricanes, floods, wildfire. You can tell we're busy when we're talking about those things. We don't need to tell this community that. But also on the man-made disasters as well that we're seeing. We've covered riots, explosions. The longest event that we are covering is the conflict in Ukraine, so we're monitoring that daily as well, looking at how areas are changing, properties that have been destroyed, key infrastructure impacted, access to ports, those sorts of things. And our responsibility is, first of all, making sure that we can accurately represent what's happening on the ground as it's happening. So nothing that we're doing is modelled. Nothing's predictive. So we're not competing with cat models, for example. We see ourselves as a complementary service. We can say, this is what the model might say, this is what your underwriting assumptions were, but these are your exposures, and this is what's happening on the ground around those exposures as we speak.
Yeah.
And we'll be using things like device data, so we can see, are roads open or not. We'll be looking at, what does the satellite tell us? Do we need to send an aerial plane over to capture some high resolution imagery? I mean, we had a hail event in the UK this week. It's difficult to see any impact of that from a satellite. Do we need to deploy a drone team? So we'll make use of a variety of data sources and providers to build an accurate a representation of what's happening on the ground.
Yeah.
And then crucially, this comes back to our point about making it useful and actually accessible, tying it back to your exposure. So there's no good me saying, oh, here's a picture of a damaged property. You need to know, is it one that you insure? How damaged is that property? What portfolio is it part of? Who's the broker? And all that information needs to be accessible to you at the moment we tell you something's happened.
Yeah.
For us to have a product that actually is useful and not just creates another 10 questions or another 10 processes for your staff.
Yeah.
So people always want to talk to us about the cool pictures and, like how does a satellite stay in space and all that good stuff. And what I want to talk about is exposure data quality and how we link it to geospatial resolutions. Yeah. And you don't get many friends doing that, but that's the important
it's
thing.
It's a lonely space.
It's a lonely space. But those who are interested in geocoding and building quality data, you realize how important it is. And another thing about the product is exposure managers have a tough job because they're sat there telling people, please be worried about the individual locations on this significant strategic policy. Please be worried about capturing the loss at individual locations on this really complex case aggregate loss.
Yeah.
And they're the only ones often championing for that, certainly historically anyway. And our product really raises the value of the data assets they're capturing to the claims community.
Yep.
Because suddenly claims handlers and people making decisions about do we issue an additional living expense to this family, they suddenly can see the value of that data because they now know the roof has been blown off, it was put on this day, it had solar panels, okay, just make the payment.
Yeah.
And it's really trying to service those strategic data sets and make them valuable across a chain of people responding.
Well, yeah, and when you think about those significant events, what you oftentimes have happening is the industry sees it coming, especially with like natural catastrophes and things, but less so for obviously political events. But there's various storm trackers and events, and everyone's sort of watching it come in, and they'll model kind of broadly what a number is saying it might be. But when something has hit landfall, when the event is occurring or has occurred very recently, there's this need for like the exec of these insurance companies to have like a day by day brief of what's happening today. Where is stuff at? Are these projected loss numbers becoming accurate? Like where do we need to make ex gratia sort of claims payments? Do we need to go out above and beyond to do certain things to get in front of this or not? And having that information several weeks later is much less valuable than sort of getting these sort of very high fidelity views of what's happening as of right now, with whom, specific properties, because then you can really lean into the value proposition that we promise to insureds. Do you see then that this is the primary point of sale is towards the insurance company so they can deliver value to the insureds, or do the reinsurers also find a lot of value in sort of getting this level of detail and information?
So to date, we've got more clients using it from an insurance perspective and sort of loss adjusting perspective. But we're starting to get a lot more interest with the reinsurance community because suddenly we've built up this catalogue of events. So it's not just useful during an event and that immediate event response where you're sort of triaging on the ground resources, but also in terms of looking at how do different books perform over time across different event sets. And so we're starting to see that more from sort of an underwriting perspective of interest to the reinsurance community. And indeed, because we have access to lots of different building stock data, we can start to surface some of that information and say, well, is this useful pre-event, not just in the event response. I still think, though, a lot of the questions we're getting from reinsurers tend to be at a macro level, where they want to know sort of how did this event perform in general and how aligned was it to our models.
Yeah.
Whereas the insurance questions are much more specific about what happened in this policy and why did location X and location Y not recover in the same way, and what does that mean for underwriting.
Yeah.
But like I said, I think because we've built up this historic catalogue now and we're building it every day, I think we've got about 3 ongoing events today, it's starting to be useful for that reinsurance community in more of a predictive nature.
Yeah. Well, and that granular data as you build, and I think it's an important strategy in your role, obviously, but when you think about product in our space, you have sort of phases of that, right? The first is delivering like profound value for this specific use case.
Yeah.
And you really lean into that, but it doesn't take very long at all to that value to then begin to aggregate and present other really interesting, additionally valuable points you can go towards. And when you think about that level of granularity and fidelity of these types of events, and you begin to aggregate that, and then you can just sort of let the actuaries run wild on it.
Yes.
Like there's so much interesting stuff they can do of going, oh, we should begin to introduce these various adjustments and nuances to the policies we want to write, or how we want to structure programs and those types of things. And it feels in many ways that this is sort of one of the stepping points of how this industry will continue to evolve. Like the genesis in many ways of what new products the insurance industry might create come from, right? Is going, oh, we saw these things with a, riots and civil commotion sort of, event.
Yes.
What might that look like for new products in this space?
Yeah, absolutely. And so we know that we're not going to have all the answers. We really, I'm just going to sound trite, but we need a collaborative relationship with our customers so we can start understanding what's important. And the modifiers and the question sets that we ask of our brokers might begin to change because of things we're observing when we create this geospatial representation of an event. And we're already starting to see new features emerge, or things that we thought were really, really relevant that perhaps they're not as relevant as they might have been, or perhaps we don't need to ask about them. We can make some assumptions, and that's broad enough. And I think doing that by understanding how an event actually performed. We're not talking about the claims that you received or the claims your cedent received. You're now seeing that within the context of what the event did, not how it was modelled, not the predicted sort of footprint. This is what the damage was. This is how the book that you failed to win at last renewal performed. And suddenly we can start learning a lot more about how our products as an industry, our general policies perform in these events. And when we look at communities that, are all over the news at the moment, the State Farm announcement regarding California new business. I mean, you look at communities like that are starting to, as an industry, we have to do more. We hope our data can be useful when people say, okay, so which bits of this could we have taken, and what do we need to do to make the other bits something that was made business sense, but also made our cover accessible to the people that really need it. And you're basing that on data, observed data, not predictions. Now, I don't say get rid of the predictions; we need them, but let's have another lens that's challenge, and the models will challenge us as well. And going back to the collaborative point, we have insurers that will really push us and say, but you told me that building was severely damaged. We didn't observe that. What happened? And we can start going through it and picking the data. And that for us has meant we've had to get new suppliers or weird and wonderful ways of understanding that a building wasn't accessible because it looks great. It wasn't it didn't seem to be impacted, but we can see X, Y, and Z happened in the contingency line that we need to pick up on a sort of a bigger scale. So I think that constant learning, but really having the confidence to take a product outside of its initial intended use case. We were event response, and just take it away and say, well, okay, what happens if you were looking at this from an underwriting perspective? What happens if you were looking at the business that you failed to successfully win last year and applied the event to that? How would your pricing strategy have changed? And those sorts of conversations are now happening, and it's really interesting.
Yeah. Well, and you said something that resonates a lot with us as well, is this need and willingness and desire to collaborate with your clients around what are the next most important things now that we can do this. And a lot of times those second tier solutions only emerge once you've done that first tier. It's like, we've done this now, and they go, this is so valuable. And you go, what do you care about now? Well, now that we have this new thing, now we'd love to be able to do this. You're like, okay. And you make that iteration. I think one of the things you see a number of, especially early stage startups in our space, do is they try to just come and say, this is where we're going to go. We're going to do all of, this will be our product and how we're going to transform the industry. And they try to take that journey alone. And in reality, the most effective way is to build something valuable and work with your clients around, now that you have this new asset, how can we add more value? And you continue to do that. The other thing that made me think, and I'm wondering if you're doing any work here, is the need to understand how we're delivering, how the insurance is performing, in the sense that, like, you'll oftentimes have governments sort of evaluating the performance that, and it's less about maybe the COR, but more about if the loss ratio is 0 on a book, the government, the regulators aren't going to be thrilled about that. They want to have it where this is a product that's being paid for, but also being put to use. And are you having conversations with governments and regulators and these types of people as well, in a way to evaluate the performance and the value that it's being delivered to communities?
Not directly. I mean, if any of you are out there, let's chat, because I think it's a really good idea. But we are indirectly, through the insurers, in support of their scenario models, when they're doing their own stress tests. But I think that's super useful, because again, it's all about how do we help keep insurance relevant, and as an industry, how do we build products and services and structure policies that mean communities who need cover can afford it, and the cover is responsive to their needs. So one of the things we're doing is working with some smaller organisations who are looking at how do you fill the gap between what a client is able to pay for insurance and where an insurer can come down to. And that middle between willingness and ability to pay and traditional policy starting is a gap. And we're seeing some interesting solutions come there. We all talk about parametric quite a lot, but some data solutions, some of them driven by the traditional markets as well. And our products can sort of support there, of saying, not just in the acting as a trigger, hey, an event's happened, it's going to give rise to one of these losses, but perhaps you need to structure your policy here. And if you had, this is how your risk profile would have changed for the last hurricane, or this is how you would be responding to wildfire right now. And we're getting a lot of interest, especially on events like hail and wildfire, to actually say, well, let's use this to develop more innovative products, or use it as a way to access the traditional products. I don't think all the traditional policies need to change. But there's a gap, and I hope our data can be used. In terms of the 0% loss ratios, where we know that not many of them exist anymore. Someone out there might be writing some lines, but I think it's a really good challenge. And I think, again, as an industry, how do you balance that and diversify your risks? So you're writing in those, talking about basics of pricing, but you're writing in those places that you can, stomach the loss and actually help you support those areas that are high risk. And it's going back to the principles of, premiums of the many, risks of the few, that kind of stuff. But we can show that on a global basis. I think as an industry, and in corporate, you kind of stick to your swim lane. You're like, I'm a property underwriter, and I write in my territories. And I'm hoping that our product can continue to deliver value that brings people up above and says, oh, actually, I need to collaborate with different providers, or I need to collaborate with different people within my same organization, and we can solve problems, that we haven't been able to see before.
Yeah, and I think when you look at the ambition of the industry more broadly, especially in that gap that we were talking about a second ago, it's becoming increasingly important to solve for that. And you have simultaneously income disparity growing worldwide, and a concentration of wealth being sort of more and more to the fewer. But at the same time, you have an ever increasing sort of change in climate, which is causing more severe and more frequent events worldwide, and increasing geopolitical tensions worldwide. So not only are you having the ability to afford insurance in its traditional role becoming increasingly, centered around certain geographies and certain economies, but you're having a worldwide sort of imbalance in ways that creates the risk pool that is larger. And I think it's going to be increasingly important to look at how can we use data to help understand where policies can and should fit. How can we use that data then to encourage or incentivize government programs to assist where they can, or pool programs, or whatever else it might be. But if we can have data that fits that the actuaries can begin to lean into, it creates a really interesting way for us to go, this isn't unsolvable.
No, exactly.
It's just, we need a little bit more help. We need few more tools. We need a little bit more support in solving them.
And let's bring it to life with real examples as well, because it's so easy to think, well, this is our process, this is our policy structure, but to really challenge it, bringing it to life with, this is what's happening on the ground, the people that hold a bit of paper and say, I'm protected by this company. And so I think, I don't want to challenge indemnity too much on this podcast, but if you think about, we observed it in Australia with the Queensland flooding. The Queensland flooding. We saw homes and businesses being washed away, and because of lots of innovation in the market and our good work by insurers and reinsurers, those properties rebuilt very quickly. But then they were washed away again. And we need to challenge ourselves about how we support communities in terms of their overall resilience, not just doing what we said we would do well. And we've got good at that. And as an industry, we've always been criticised for, it's in the small print, they don't pay out, and all. Well, I think that's kind of like thought terminating to say, oh no, we did what we said we were going to do. We now need to do better. We now need to challenge ourselves and think about long-term resilience and framing ourselves as the risk partner to our clients. And again, taking it back to the MIS products, whilst we're not interacting directly with your clients, we're trying to arm you with the bigger picture, and not from a model perspective. Like, have real conversations with the people designing your products, the people designing your policy structure with the reinsurer. Show our product, show what's actually happening, use it as a tool to say, this is why we want to change, this is why we want to try something different.
Well, I think you have it where the insurance community for a decade or two now has constantly built that drumbeat of like, how do we add more value? How do we do more? And I agree with you. I think the model of going, I paid you premium for this vehicle, and I crashed that vehicle, and getting a new vehicle or the money back or whatever it might be, like, that works. And if you're paying your premiums on time and you haven't lied about what your asset is, like, the industry is very, very good at doing those things. But how do we add more value? How do we do more? How do we build in that resilience is something that we've been working towards for a long time. And I think we're making improvements, but these are the types of things that begin to really unlock the creativity of, how does the insurance industry step in and do more than just provide the indemnity when they're on the hook for it? They always have done, right?
And just on that, I think going back to our first point of let's not be too hard on the industry, because it's tough and we're working in a highly regulated environment. It's so easy for us to sit here and be like, we can do all these things much better.
Exactly.
I was at a conference recently, and one of the speakers said, I have a lot of people come to me with great ideas, and I have to tell them, I love your idea, but it's completely illegal, because they don't fully appreciate the regulatory space that we're in. And thinking about some of the things we see in the States with, you must send an adjuster, a loss assessor to the site. So me coming to you and saying you can adjust it remotely from my tool is useless, and I'm wasting your time. But if I know that that's the area you're operating in, and that's what you're required to do, and we can talk about how you can use my product in other ways, but also, how do we influence regulation? It's massively influencing us, but as an industry, how do we say, hey, actually there's technology out there and there's tools out there that we've now tried and tested in other areas on other events. Maybe we can revisit some of the stuff that in some cases holds us back, not in all cases, but in some cases does, as an industry, kind of keep us where we are.
Yeah. Well, and this is where you really see difficulty with innovation in our space.
Yeah.
Is you have it where so many times creative solutions emerge.
Yeah.
But if you look at the consumer space, and this is not intended to promote illegal behavior, but if you look at the comparison between Uber or Airbnb, both those companies fundamentally broke the law around, can you pick up and ride sharing? Is this allowed? Can you rent your spare rooms as little miniature hotels and all? Like, no, you cannot. But it got so much adoption that they were then able to force the regulators to change their positions on things, because the consumers loved the product so much, and it allowed for innovation to essentially force a sea change in the regulation. That's not how reinsurance or insurance will work, right? We will never have it where it's like, well, we decided to not follow the regulation in this state, and therefore,
endorsed by the Reinsurance podcast.
Right, exactly. Despite our glowing endorsement, we do not allow you to break the law. But so you're sort of then forced to say, we would love to influence regulation, but that is not a boat that turns very quickly.
No.
Right? So you have it where I absolutely agree that the regulators need to support innovation, especially in mundane ways. If we can get 4K drone footage of sites, why does it say you have to send a human out to look at that thing, and they're going to get on a ladder against a rickety building and
put themselves in danger 2 weeks later?
Right. Yeah. Right. So we're saying we can look at this in real time with greater accuracy and more data, with nobody being in risk, and we can do it in real time. If only you'd let the law regulators change that. But these are the sort of constraints in which the industry also operates, where amazing ideas are coming out, but you're right. We'd love to, but it's illegal. And there is no sort of loophole that we can deploy as an industry in the way that you can in the consumer space.
Yeah, and I think you're right. And I love the Airbnb and Uber analogy. But I think you're going back to a loss assessor going out and actually inspecting a property. I think we need to prove that innovation doesn't mean loss of expertise. It doesn't mean that you take humans out and you change a process, and we just make it all robotic, and a lot of these things that are emotive for people and fear for people. I think if you've ever dealt with someone who's put in an insurance claim, the power of having a human. I remember, I've actually been in a call center, spoke to people who've been on the side of the road, have just had a car accident, and with a second call they've made after the ambulance, you need a human. I don't want an app at that moment, and you want the assessor there. But what happens if that assessor could be there with an answer? What happens if the assessor could say, last week the drone flew, and these are the pictures of the damage of your roof, and this is what we're going to do about it, and this is why your insurance policy is responding in a way that feels odd. Here's the answer. When I see you, I can give you the emotional support that actually is silent on our policy wordings, but is certainly expected. I can actually do that, and I'm here as an expert. I'm just giving you a better service now. And I think sometimes we kind of get a bad name of innovation means fewer people, and it means it's all going to be app driven and stuff like that. I don't see it that way, and I don't know how we convince the people that's the case without doing the Uber way and just getting on with it and bringing it to life. And maybe that's it. Maybe that's what we do. We keep loss adjusters going out at the time, but they have, products like mine on their phones, and they can actually show it to people and bring it to life, and that becomes the expectation.
Yeah, well, I think that additional information is so valuable, right? Especially when you're in this hyper emotive state of just having experienced a catastrophe. You've fled your home because the hurricane's coming through.
Yeah.
You've seen the news footage. I remember when I first came into the industry, this was one of the products that I thought was so excellent the insurance industry did, but where was these events would happen and the insurance would pay out like 10 grand for you to be in a hotel up front. I was like, that's amazing. And it is. I hold that that's a great service.
Yeah.
But if you're sitting there in your hotel 4,000 miles from home, maybe not that far. It's not that big of a hurricane.
Well, it's already busy out there.
We'll see. Yeah, maybe in a decade we'll have. But you're hundreds of miles from home, and you have no information to update on.
Yeah.
Right. You call the insurer. You're like, what's happening? Like, well, you have your hotel money. You're like, great. Do I have a house? What?
Yeah.
And if they can be able to sort of pick up the phone and give you an update of, here's what's happening. This area is quite badly done or not as badly done as some of the other areas. Here's what we sort of see.
Yeah.
We won't be able to get in there to start doing more clear up or anything else till this point, but the drones have come in. We have all these shots. This is where we see like this is a total loss, or this looks like some flooding, but you're like, give you some sense, like the not knowing in those moments of like deep trauma.
Yeah.
The not knowing is the worst thing.
Totally.
So if your insurer can be the person who puts someone on the phone and that person knows things, that is an immense asset.
Absolutely.
And more insurers could be doing that during these like critical moments when policies actually matter. Because until those moments, it's the monthly bill I pay each month, or it's the annual policy that renews. It doesn't have that sort of emotive value.
Yeah, and we talk about the monthly bill. It's peace of mind that you're buying. As soon as you have a bad claims experience, that monthly bill becomes even more a grudge purchase because you're not buying peace of mind. You're buying, really hope I never have to deal with them again.
Yeah.
But also using that to say, hey, when you come for your renewal, as an industry, we know what happened in that event. You don't have to drag it all up and talk to us about it. It's still emotional. You lost your business 3 years ago. We know. And we're pretty good at sharing information across the industry. But we can be better. And sometimes having products that allow you to go and ask the additional questions to a product rather than the person who experienced the loss, I think is a nice buffer.
Yeah.
And if it takes out 2 of the 5 follow-up questions, it's already changed that experience fundamentally.
Yeah. Well, and I think it becomes as well a resource for the sales community of our products.
Yeah.
If we can go to those people who've lost businesses and say, we understand this much more now. We've introduced, this is all the different elements. Even if it's like new parts of policy that they can purchase for additional money. They're like, here's how we're structuring this now. You can have these things included automatically. Additional premium applies for these additional things, and this is why they exist in this way, and this is how we've thought this through better. Like, it gives that salesperson a vastly more powerful toolkit to build a product that's fit for purpose for various people and businesses.
And I think to get to the point where it's a product that a salesperson can use, you need some happy actuaries. And they need to be really happy actuaries.
Yeah.
And using claims data isn't going to cut it because you've never structured a policy that way. So how do you know how your claims would have developed if that was your policy structure? Well, that's why we want to make more of these events accessible to actuaries and the underwriting community so they can start running their own scenarios and stress tests and understanding where their your comfort levels are for risk, their appetite is, based on no experience writing in that state, in that country, for that peril, structured that way at all.
Yeah.
And they're not relying on a model. The model's there to help them work out where the challenge should be, but the model's also based on traditional policy structures. So, let's break it all for a bit and see if we rebuilt it based on client need up, what could we be left with? And again, one of the things we're trying to do with the product is put enough of a framework around it that it's immediately useful and easy to use at the point of an event, but without making sure that we can break down that framework and turn it back into its raw parts.
Yeah.
So you can use it for working out, how do I change my policy structures going forwards?
Yeah. Well, and it's a similar approach in some ways to how we look at it, where we're not here to give you the answers, but we're here to give you all of these tools you can deconstruct, and like you will go find things that are interesting, and that's where you should be spending your time and your value and providing that value, especially for, you know, the likes of actuaries and things. But you're not saying like, well, this is how you should do it. This is what the answer looks like. It's let us help you sort of run at this. Let us allow you to deconstruct it more, break it into various chunks or views that you might care about, and hope that and expect that the creativity of the professionals in our industry will emerge with like net new way of solving problems and adding value.
Yeah, I agree. And we're seeing it. We've seen some really cool stuff come out of, you know, opportunities to collaborate and look at things in a different way. Even the sorts of feedback we're getting in the market about, you know, let's take something like Hurricane Ian, a huge event affecting multiple states over multiple days, multiple perils in force at that time. We've got evacuation orders being followed in some territories and not in others. It's all the complexity you can imagine. We've got some data providers comfortably providing data in other areas if that's not consistent with what we see elsewhere, and it's just everything together. But when we aggregate it up into this thing that's useful during the event, the feedback we're getting is, please can you make it more simple? Please can you make it more simple so I know which phone to pick up first, which, you know, loss adjuster to call first, and so I can figure out what's happening. And then 2 weeks later, can you break it all back down again? Because I now need to talk to my underwriters and figure out, what did we do well? What could we do better? And what do we know for next time? And we need to be able to oscillate between that. And that's what makes this quite interesting, because, and you see different ways that the industry is solving the problem. But fundamentally, I'm putting out 2 versions of a product, and I get to see who's using it in different ways. And you see the ideas moving around the market. And things are happening. Like, we will get there. We just got to keep that level of flexibility.
Yeah, no, for sure. And it's the right way to approach it, because you give that flexibility to the clients, and then they go into which mode that they get the most value from. If we sort of look forward then over the next sort of 3-5 years, what are the things that most excite you, whether that's MIS tools that you guys are working on now, or things you're seeing as sort of a sea change or a shift in the industry? What is sort of...
such a big one. So at MIS, you know, we've proven the value of our product and a multi-source approach. We've proven that it works, and we've let the claims develop, and we can show that our product is accurate and can be trusted. So that's great. So now we're thinking, well, how do we apply that same process and model, the framework that we use, to other problems, i.e. the underwriting use case? So we're there when the events happened, you incepted the risk, and now you've got to deal with it. But how can we have helped you understand whether or not to accept the risk, or how much to charge for that risk, or what are the features of that risk that mean you need to deploy a different product set? So I'm really excited about that, and we're moving more into that space, and again bringing it all into the same platform. So you've got underwriters collaborating with claims and exposure management as it's happening. So I'm excited about that. But I think from an industry perspective, I'm seeing that, and you'll probably observe similar, that the Insurtech space is as alive as ever, but we're starting to have more of a focus and more of a voice. One thing that was asked of me recently is, well, you talk about how difficult it is to be an Insurtech, and the sales cycle is very slow. How do people survive, especially in the sorts of investment environments that we've had since the pandemic? And you're starting to see the industry say, we do need to pay these guys for proof of concepts, and you don't need to pay us. It's not extortionate amounts. But paying us to build new products and features and test them with you helps us survive, and us surviving is good. And I'm starting to see the Insurtech community sort of move with more purpose on that. We're kind of expecting a bit more. with my insurance hat on before, I might have been like, oh, you guys. But now I'm here. You see the energy, and it's working, and we're starting to see more Insurtech succeed, which is good for the whole community, the reinsurers, brokers, everyone. The Insurtechs that survive is good, and Insurtechs that don't is also useful, because we all understand why didn't that work. And again, I keep saying the word collaborations, so like try it again. But really, the collaboration between Insurtechs as well. It's a friendly space, and I think we can all give more to our industry if we say, how can we work together? You have a product that seems to be getting traction. I've got a solution that they need. I just don't know how to package it. I can't survive the sales cycle, whatever it may be. Let's collaborate. And we're super keen to do that.
Yeah, we're certainly seeing that, and I think it's a couple things. I think it's that we're in a second wave of insurtechs now, where at least for the companies that build products for enterprise, we've shifted entirely away from like how we disrupt and break models towards what are the pain points that people have and how can we help solve them. Many of us come from roles in the industry where we've seen firsthand what the experience is like. I think you're exactly right again in that the collaboration across these tools is way, way higher. So we don't go into like independently. They're going like, oh, if you're doing some modernization work and you're working with them, we already know how to talk to their data or like these types of things. And there's this depth of value being added. And when you have that clarity of value that you're providing, it's much easier to then for them to be like, well, you're obviously doing all these things. We're happy to, pay even for pilots, but then also the bigger, longer term contracts, because there's clarity there. I think in that first real wave of just innovation for the sake of innovation, right? It was innovation as charade or innovation as costume. It was like, let's do it. You have a team of people who sit on beanbag. It's like, it's quite obvious why we had to move away from that model and move the people who are interacting with innovation units to being the underwriters, to being the active actuaries and these people. So you're seeing that shift, which I also am looking at the next sort of 5 years with a lot of excitement around where this industry will begin to plug these things together.
Do we still need the word Insurtech?
I'd like to abandon it, but that's a podcast for another day when you come back for round 2.
Okay.
Rosina, absolutely delightful conversation. Thank you for joining us on the Reinsurance Podcast.
Thank you so much.
Until next time, everybody.